But the big thing I want to talk about right here, right now, is the SEC and the CFTC have issued guidance on which digital assets are securities. U.S. regulators have taken unprecedented steps to alleviate crypto's historic regulatory overhang. The guidance, in broad terms, aims to establish a clear taxonomy covering digital commodities, collectibles, utility tokens, stablecoins, and securities. Explains when a non-security crypto asset may fall under or exit investment contract classification. Clarifies how security laws apply to airdrops, mining, staking, and token wrapping. SEC Chairman Paul Atkins asserted that following a decade of uncertainty, this interpretation will provide market participants with a clear understanding of how the commission treats crypto assets. Yes, sir. Loving that. Under federal securities law, in a separate speech yesterday at the DC Blockchain Summit, Atkins urged the guidance returns the commission to its core mission of protecting investors involved in security transactions. Let this sink in. It's huge. In this speech, Atkins also outlined 3 regulatory frameworks for crypto startups and issued assets. Startup exemptions, a time-limited registration exemption for offerings of investment contracts involving certain crypto assets, which could last up to 4 years, and allowed entrepreneurs to raise up to $5 million USD with principles-based disclosures while building towards maturity. Fundraising exemption, a new offering exemption for investment contracts involving certain crypto assets, under which entrepreneurs could raise up to $75 million during any 12-month period and file a disclosure document with the commission that includes principles-based disclosure, a discussion of financial condition, and financial statements. Investment contract safe harbor, a safe harbor from the definition of a security of certain crypto assets that could apply once the issuer has completed or permanently ceased all essential managerial efforts it represented or promised under the investment contract. In response, Atkins noted that the SEC plans to initiate a formal rulemaking process, for example, publishing proposed rules for public comment that could ultimately be adopted as binding regulation in the coming weeks. This proposal would include more details surrounding the aforementioned proposals. Notably, the guidance also includes examples of digital commodities, listing the following assets: APT, AVAX, BTC, BCH, ADA, Link, SOL, XLM, XTZ, and XRP, baby, all the way. So the takeaway, the SEC, CFTC's guidance is fresh and will take time to be fully digested by crypto space. Having said that, the question of whether a cryptocurrency is a security has often been one of the main challenges for the digital asset space forever. For the crypto space, the guidance and incoming formal rules could offer transparent pathways for business models that were previously difficult to operate outside of the U.S. Building on this, we've been waiting to hear this, ladies and gentlemen, Senator Tim Scott stated that negotiations on the Senate's crypto market structure bill are progressing with a draft of stablecoin yield language expected this week. Scott credited Senators Angelina Alsbrooks, Thomas Tillis, and the White House Patrick Witt for efforts on yield, and said other outstanding issues, including DeFi and ALM, are under discussion. Ladies and gentlemen, it's massive. It's massive. So massive. You know, it's so crazy. I asked everyone and thank everyone in the comment section for answering my question about why everyone throws shade on certain coins. I was telling a family office early this morning, you know, that whole throwing shade on different coins. I don't like you. Your coin's terrible. This coin sucks. Blah, 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 blah. And all that haterade. That's like when you run a physical concession for people and you're recovering every medal on that concession. Every medal you're recovering. So throwing shade on one medal is like, you know what? We're going to recover the silver and gold. We'll throw out the copper. We don't like the copper. Throw that. That's garbage. Throw that away. We don't want the copper. Does anybody want the copper? Think about what I just said. When you have your own concessions or you're running one, you recover everything. They're all an asset. Why would you throw shade on one or the other? It doesn't make any sense. But it's all the analogies of how you put everything again. So if you look at what's happening in the markets right now, it's so crazy. It really, and none of this is financial advice whatsoever. Now I want to go into what we're telling people what's coming next. Again, what we pay attention to. And if you're still here, why don't you subscribe and pay attention to the things that we're paying attention to? You'll be no worse off by hearing another fresh perspective. And I want to say this to everybody who's here. Don't you love knowing what's going to happen before it's reported on the TV? Because you're here listening. How much do you love hearing things here and then hearing them in the next 24 to 48 to 72 hours, people talking about them? Tell me. You have to love that. You have to be like the most interesting person at family gatherings, right? That's why super intelligent people don't waste their time talking to a lot of people. There's no point of it. And like I always said, the honeybee doesn't waste his time explaining to a fly that honey tastes better than feces. It just doesn't do that. It'd be a waste of time. So we're going to go into what's really important right now and what we're watching. Stay with me, ladies and gentlemen.